Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're disco in. Please, before I start, like if you like, share, subscribe. This is a presentation for the USD, the Euro USD, the stock market, gold, silver, GDX, the Dow Industrial, the whole thing. Okay, so we start with the beast, what I call it today, the beast, the USD, the US dollar, the DXY. In the beast, we are still in a breakout mode from the mini cup and handle. Unfortunately, I wish everybody the best, but I'm not a dollar bull. I'm all cash. I'm not short selling. I'm not short selling the market. I'm not anything. I'm just watching and trying to be as much neutral as I can and try to look at things in an unbiased way. Okay, breakout mode as far as the price action is concerned for the cup and handle. Also, a breakout mode as far as this mini bull flag is concerned. With bullish disco combo, it is when the RSI goes over 50, the stochastic gets in a bullish mode over 80 or anywhere. It could be here. But bullish mode for stochastic and bullish MACD, this is the disco combo. And this is the most powerful one when you have an embedded reading in the stochastic. It's not a good it's not a good thing. It shows not a good thing if you want the market to bounce or the goal to bounce. But if you are a DXY bull, it is a good one. But I'm not a DXY bull, and it is not a good scene. It is intact. If you have this high reading in the stochastic, usually buyers will step in and buy every dip, and that's exactly what's been happening for some times now. Buyers buying every dip all the time. So last time this happened, this embedded reading happened, it was April 6th till we lost it in May 17th. The price action went parabolically 5.5%. And we have the same state now. So I'm not bullish on the dollar because I want things to collapse. Or I like the dollar. I'm bullish on the dollar because of the technicals, especially the embedded reading in the stochastic and also the breakout mode in the cup and handle. Okay. And now we are only less than 2% after that embedded reading. So if history repeats itself, we might go another 3%, 4%. Nobody knows. Okay. So I'm bullish on the dollar, not because I'm gaining anything from the dollar, just because of the chart. If you watch the older videos, I was not as bullish as now. Good deal. So this is USD in the yearly time frame. So each candlestick represent a year. And this beast is in breakout mode in the overall cup and handle. And it's a scary looking candle. It assumes more upside for the dollar in the longer term. Okay. This is the Euro USD. Also in the Euro USD, as I made that mistake of ignoring that negative divergence and the breakdown of this wedge. Boom! This is what happened. I'm trying to be as technical as I can and no more wishful thinking at all. And now we are definitely in a bearish disco combo in the Euro USD, and we just did the kiss formation in in the MACD, and usually most of the time the stochastic will dip, will give another dip, and the price destruction will take place. This happened in July. This happened in May. I'm looking for another kiss. This happened positively in early 22, that kiss formation. So we are doing the kiss formation now, and most likely we going down. So USD bearish, DXY bullish, and this is that disco signal, and that's mainly why I'm bearish on everything. I always go to zero risk whenever this bullish or bearish disco signal. This is bullish for the equity put to call and bearish for the market. It is when the 20-day moving average has a bullish crossover with the 50-day moving average in the equity put to call, and usually most of the times this follows by price destruction in the Dow, IWM, gold, GDX, silver, all of the above. And it does not mean a meltdown, it means negative. It affects them always negative. If you put this chart on the top of any chart, such as gold, silver, IWM, anything, in any major indice, this is always I back tested it. It has over 90% chances of success, of more negative reaction to this bullish crossover, and vice versa. This exactly gave us the signal of the bullishness that took place in everything, the equity, gold, silver, everything, right here, and it happened in May, so on and so forth. So this is the disco signal, which is the moving the 50 and 20-day moving average for the equity protocol. And I added more things. I added the 200-day moving average, 10-day moving average to it. And I noticed if the moving averages are in bullish formation and you have a bullish crossover, which means bearish for the market, the price destruction is even more meaningful for anything and everything. So 200, you have 20, 50, and 10. So 10, 20, 50, 200. It's bullish structure. And it's not good. So hopefully it doesn't work. It doesn't always work, but that is why I'm bearish. I'm not bearish because I hate the market. I'm not bearish because I'm short selling anything. I'm bearish based on technicals. This is the Dow Industrial, and this pattern took place there. It's almost very close to the 21st of April 2022, and now you have the price action below the 200, 10, 20, and 50, and you might have a bearish crossover between the 10 and the 50 very soon. And if you back test this, it always produces a price destruction to the downside. It does not mean a meltdown, it means negative reaction to it. Another thing that I don't like is the embedded reading in the bearish side in the Dow. It's quite the opposite in the dollar. So usually when you go below 20 for a couple of days, more than 2 days, price destruction follows. This was true in November 19th till December 2021. You can notice you had the embedded reading right here on November 19th. Dow was at 35,555, and once you lost it, the Dow was at 34 something. So you almost have a 1,000 point destruction just by the embedded reading. So the moving average structure, some of them have bearish crossover like the 10, the 20, and the price action below them all, and that is not good. And they all are, except with the 50, they all are down sloping, and that's never been bullish. Silver has the same thing. You have an embedded reading in the stochastic, and in the past you can see that in May it affected it. You could back test it. It always produces a price destruction. Silver had a nice rally on Friday, yet it was sold off in seller zone, and that's never been good. Yet you have a beautiful two bullish candles. You have almost a quasi hammer and inverted hammer. The good thing about silver right now is when it comes to the COT report, the commercials are buying silver left and right, and they are now net long. Usually, when they are net long, it's almost in the past. No one knows the future. Almost close to a bottom, or very or at a bottom, and a nice rally follows. In the past, when the commercials are net long in silver, okay, so that's always a positive thing, and I love it. But the price action is still in an embedded reading. Okay, GDX is the same. You have a bad embedded reading and rejection from an older price memory in GDX, which is the breakdown area of July low. Okay, and also beautiful bullish and decisive candle that came with a gap. So we love that. It's good, but the embedded reading is not on its side, and dollar is not on side yet. Sometimes GDX gold would rally at the last leg of the dollar. Let's hope that is true. It happened many times in history, and it always at crucial times. So it's a hope that's based on history, but there's nothing to show for it right now. But it's a valid hope. Okay, so that's for GDX and for the Dow, and also unfortunately this disco signal, most of the times, more often than not, also affect GDX. It affects GDX, GDXJ, gold miners, stocks, silver, gold. It always is positively correlated with the dollar and negatively correlated with anything else and everything else. So I'm still hopeful that silver will bottom based on the COT report. I'm still hopeful that GDX and gold will bottom, even if dollar goes up. It happened in the past, but there's nothing. There's no evidence for that. Please like if you like, share, subscribe, and do remember that disco is forever.